Let's get this up here. All right, let's try to make a little sense about, so especially, I'm not trying to sound like a seasoned vet, but I know some of you who may be new to this game see a VIX over 30, see this type of volatility, and automatically assume something. And even though it's not the norm, it definitely happens, right? We haven't seen a big spike in VIX and vol like this in a long, long time, right? And prior to 2008, when the Fed got their hands involved in this game, you would see these bouts of volatility and corrections every almost 6 months, something to that effect. I kid you not. All right, but since post 2008, and the Fed has been obviously actively involved, and there's been less recessions. Every time we're going to dip into a recession, you get the Fed chopping rates and pumping liquidity and stimulus. So that's why this has been out of the ordinary in a sense. Okay, but don't be afraid of the volatility, okay, because it's a normal process, and that's what I want to talk a little bit about. It's a normal process from where we came into this from, okay? And I want to start just quickly, and we'll talk a little bit about where we are. Let me fix this chart because it's not good. Hold on, I'll go to this one. This is a lot easier to see. All right, so basically, a lot what we're seeing here, okay, especially last week with this selling, has to do with the positioning and everything that happened prior to this sell-off. Okay, the reason why this crazy volatility and this strange downside price action all in a week, and I gotta admit it's pretty quick, but when you have algos and programs long, things like this are going to happen, right? When you got more automated stuff, it can get exasperated in a sense, right? But my point being is, we came from a spot, right? This whole entire rally here, where near the tippy top, okay, and this last to the highs, you had basically a scenario where the Fed was pumping in liquidity with the repo stuff and everything that was going on, forcing even right, who didn't believe in the market rally, who didn't believe in the turnaround economically, forcing even their money into risk assets and stocks, right? So we went from that point to all of a sudden, right, the last thing that anybody thought would enter a picture, and get the music to stop in a sense, was a virus that starts out of China and makes its way around Europe and now has come to our country, okay? And it's amazing that we had 1 week, and if you think about it, we were talking about this on the Sunday webinar. Here's the problem with trying to here, right? Try to position that we already hit bottom here and start to look at, getting long names, especially with some time. Here's my fear anyway. There wasn't enough time. Okay, so in other words, we only had a week of this, right? And we spoke about everything that happened prior, right? Everything that went into the process before this blew up, okay? And we see it on this, right? Those of you who are members, we look at some of the positioning stuff, and the tactical trader sentiment, all that stuff that players can get their hands on quick, inverse ETFs, put, all that kind of stuff, they were definitely showing some extremes into these lows last week, right? We know that, okay? But the positioning stuff, and that's ultimately what hammers out a legitimate bottom. I'm not talking about rallies like we saw here, okay? I'm talking about where we can start to look and add a basket of names or S&P exposure into weakness with a higher probability that these lows are going to hold up, okay? And the reason why we would have that confidence, the reason why it would be higher odds of that low holding up, okay, would be that all that positioning that we've been talking about, if they come out of their positions, right? Just logically looking at the whole example I'm going to give you right here, if all these players who got into the market late have capitulated and puked up all their longs because they can't take the volatility, they're scared shit of this virus, okay? No matter how negative the news may be, the selling has exhausted itself, right? So there's a higher probability or there's a lower probability of supply coming into the market if everybody already has puked out their longs into the weakness. Okay, so that's the logic behind trying to wait on some of these intermediate term sentiment measures, which focus on positioning stuff. Okay, and the logic is that it gives us the idea, it gives us the premise that the selling, it won't be as vicious as it's been here. Players are more reluctant, how can they, I'm trying to put it the best way. How about this? Players are more eager to put money to work because bidding on cash rather than selling because they already sold. You get what I'm saying, all right? But that's the logic behind it, okay? But my far is that, and based on the indicators we look at, that this here is not enough for all of those players to dump enough, right? We were talking about hedge funds, right? We look at like that hedge fund exposure, and they did a little bit of buying into the dip, right? They didn't even dump their longs, you know? So that's kind of what I get out of this. And now it can happen rather quickly. Days like today are perfect for that, right? So when you see rallies fail and you see some selling, come into the market, especially when there's headlines on the virus and negative news out there, that's what we'll all do with all likelihood. These guys are starting to dump and get out of their positions. All right. So that's where we are. Like I said, when we get into these type of phases, it's tough to make sense out of what's taking place initially, right? We talk about that a lot. You want to take a step back. You don't want to have too much stress on your plate, right? You don't want to get too wrapped up in over trading in this type of environment because it can drive you insane, okay? And you want to be able to think clearly and see clearly so you can understand a little bit about what the process is all about, what's actually going on out there, okay? And, when this initially happened, just like everybody else, I had no idea, a lot of people have no idea what's going on, right? This virus that got ignored over here and they ripped it to new highs, all of a sudden is something serious. We haven't seen it come into the States yet, right? All talk, but the market already has been factoring all the stuff we're going to start to see. The market's already been factoring a good portion of that in. All right. So here's the bottom line. What I'm hoping, okay, the best case scenario for us who are looking to start putting on, some decent size long exposure and weakness off this pull. I'm hoping that this thing slugs around down here, up and down, do whatever the hell you want. Okay, that type of thing, even breach lows and reverse if that's what it takes. Okay, but it does it enough to where we start to see those positioning indicators, intermediate term sentiment indicators light up green. Okay, that's the best case scenario for this thing being high probability of it being over. Okay, it was just one of these panic type crashes and new leg higher, everything's beautiful again. All right, the other scenario that can play out, in my opinion, is that these squeezes that reels in, actually more than reel in bulls, shakes out these tactical bears that have been shorting and protecting and got shaken out of their longs. They start to get back in. You get this little lift, okay, instantly, and then whoop, we go south one more time. Okay, so you could see, right, those two scenarios. When you look at those two scenarios, you know, this is a little bit of a tricky spot here, right? This is a tricky spot because you don't necessarily want to get caught, you know, because if you don't get out on the upside, you get caught and you have another leg down. And, you know, you want to be patient and have that scenario one, the ideal scenario, play out. Because, you know, that's the sweet spot, as we like to call it. All right. So the main thing here is, and I'm telling you from like what I'm doing here, okay, and you guys know, I love pullbacks, especially things like this. I want to get long more than anybody out there, but I'm trying to be as patient as possible. And that playbook, all right, and I'm glad I'm on this Tuesday webinar because I haven't spoke to you guys in a while. Remember the playbook we were talking? I know those of you who are members, we've been talking about it ad nauseum, but those of you that just show up to this webinar, remember the playbook we were talking about being nimble, staying tactical, being quick, because we don't want to get caught in something like this, right? Looking for more, looking to get greedy on the upside, okay? That was the reason why we took that approach, right? We don't care about how much upside we leave on the table, right? We want to take what the market gives us as quick as it can, the better, and, you know, move into a cash position, that hit and run type trading, okay? I'm still on that same page, okay? I'm still on that same, less so, guys. You know, I'm being honest with you. The couple of trades I've had, yesterday, I made a decent amount of money into the close because of those SPY sweeps. I missed them the time before that. You know, but other than that, I haven't been trading as much. You know, I haven't been playing as much. One main reason, the sweeper activity, you know, has been poor. You guys hear me complaining about that a lot. And, you know, with this type of volatility, you want to feel good about the flow coming in. Especially me, I want to feel good because that's all I'm basing it on. I want to feel confident about the flow coming in for me to hop in along that, you know, could go up and down 30 handles in a blink of an eye. All right, so I've kind of put my seatbelt on. I'm chilling. Started putting names away. I'm building a watch list, right? Like I told you guys, okay? And I'll tell you one thing that's helped me out throughout this process. It's good and bad in a way, okay? The flow has sucked, right? The call sweep are horrible, especially for legitimate buying, you know, names you want to buy with some time into weakness. There really hasn't been too much based off flow itself. There's been some good looking names they picked at, you know, they may be poking around at. But as far as them convincing us that they're stepping in a large way and doing some buying, you know, hasn't convinced me. Hasn't convinced me at all. So that's been good because I tell you guys that's all. Otherwise I'd there every day trying to buy something new and build a position in, you know, in the hot symbol of it. So the lack of sharp, clean sweeper activity has really kept me in check here, even to the point on the tactical side, on the intraday side. And there's been some great opportunities. I see a lot of you guys in the room killing it, you know? I just, because of the lack of quality flow, I haven't done much there either. You know? Yeah, and that's the thing, you know, in this type of environment, you got to understand it's not easy. There's big moves, there's large moves, but as soon as you get sloppy, right, you don't stick to a stop loss that you hadn't intended to put on. You're getting cocky because you realize that the moves have been so big, so the moves have been so large that you feel like you just got to hold on and you'll be up at some point in time. A lot of retail traders act like that, because, like, for example, you get long, SPY, and your timing was off, the thing went south, but you don't stop yourself out because you see the volatility, and maybe tomorrow the gap up will get you green. But it only takes one time to bury you. It only takes that one time to bury you, and you get into those bad habits. You're going to run into that one bad time. It's the inevitable. So, a lot of bad habits come out of this environment. And, another thing, you option players out there, especially those of you who try to day trade options, know exactly what I'm talking about. You got IV junked up out there, right? Like, you really need some big moves to cash tickets. So, you want to, exactly, IV's at the moon. So, all that stuff doesn't make it easier. It's very appetizing. You see these moves out there, and it looks like you can make a lot of money, and you can if you get a little lucky. But you could also get into trouble. You could also get into some trouble. So anyway, the point of the whole story is this. It's still, in my opinion, at the point we're at here, prudent to be patient. Play. We're all degenerates. There's nothing wrong with playing. Okay, but just don't stick out your neck. Don't do something stupid. Don't turn just playing into some big trade now that you need to click, otherwise you're buried. That sort of thing. You play, enjoy yourself. But the most important thing that, for me, that I've learned throughout my career, okay, because these pullbacks can make you. They can make you if you're patient enough and you're one of the few that are around with chips when it's all said and done, right? To play some bets. Okay, you have to try to not wrap yourself up in the noise that can distract you from missing some of the key signs that may be out there when it's time to turn. And it's so easy to fall into that trap. So easy. A lot of times just on the downside. Players make money on the downside. They have some success, and they're in a short, and they don't want to see the things right in front of them because they've been having success on the short side. So they don't want to believe the activity that's coming in. They don't want to believe the sentiment signals that may be lighting up. Okay, because they've built that bias and have had success behind it. So that would be my biggest piece of advice: is stay light. Stay tactical, relax, keep your eyes open. And, the thing is there's no timing. You can't say it's going to be a week, it's going to be a month. It could be in a couple days, but the inevitable is there's going to be an end to this, okay, even over an intermediate term horizon, okay, meaning that there's going to be an intermediate low at some point and a nice trending rally to highs. But that will have some lasting power over a couple months. And there are so many beaten up and shorted names out there, okay, that even if it's just a choppy uptrend environment for 2 months, if you have some cash ready to fire, you're going to kill it. You're going to, think back to like December 2018, right? The first couple months coming out of that. It doesn't take much. You can throw a dart when that climate comes around. You can throw a dart at any of those sweepers that are hitting the board, and the likelihood is you're going to make decent money. That's why we call it the sweet spot. All right, so that's what I'm waiting for. That's what I'm trying to bide my time, be patient. That's what I'm waiting for. Okay, and those of you who are bearish out the ass, okay, and you say, well, Jesus, this is going to be 2008 all over again. This is a debacle. I have no idea. It very well, who knows? This virus may turn us all into zombies at some point, right? I'm not saying I have a crystal ball. I have no clue how this ends up turning out. But what I do know from my experience is, even if it is deja vu of 2008 scenario, right? Armageddon type scenario, there will be some sort of relief rally, okay, to shake out enough bears before that final wave goes south. Okay, so that's what I'm anticipating. That's what I'm, okay, because I have no idea if that's going to turn a whole new bull run or just a relief rally in a bear market. I have no stuff I base that decision on is stuff I need to see later on, like the flow, and stuff like that. Like if we were rallying right here, the way flow looks like right now, the way it looks like right now, if we were in the midst of a rally, okay, I would have zero confidence in that rally having lasting power and turning into a trend. Okay, because I know when the smart money, when they're getting giddy and rolling the dice in the option market coming off a pull like this, you guys know they tattoo things, right? They hit everything. They go bonkers. They bomb away at names all day long. They haven't done a thing in my opinion yet. Not a thing. Yeah, it's been awful. And there's been a little flow that we could still, again, I'm going to use that tactical word, but we could still be quick and try to catch, some stuff like that. So that's what you want to try to focus on. But as far as like them convincing us that they're trying to nail out a bottom here, from my flow for a long, long time now, I'm not seeing it. And I'll give you an example. Here's one example. Win. Okay. You guys saw the action in Win? For those of you who didn't see the action in Win, a sweeper came in and hit June calls pretty aggressively, nice size. Win could catch size as it is, but decent size, especially compared to what we were seeing. So now, if they really are looking to build a position in Win in this climate, okay, whether this stock's up, down, sideways, crooked tomorrow or the next day after that, you're going to see them come in and add. You know what I mean? They're going to come in and hit it again. They don't care if they're down on it. They don't care if it's sideways. They look to take advantage of the market still being down here. Okay? And what you'll start to realize is, little by little, by being patient and keeping your eyes open, you're going to see, a good handful and have that type of action that I'm explaining, like was possible and Win. And that's where your watch list grows. And the beauty of it is, you don't even necessarily have to play those names. Okay, if you like those names, you play them. You could take baby steps, put on a little ad, do that. The point of it is, when they start to do that, that's the start of it. Okay, that's the start of them, real buyers, putting money to work into a correction. It's not when they come in weeklies, in a band, they're just playing for a squeeze. Right? When they're coming in buying weeklies, they're playing for a squeeze. Right? When they're playing Tesla weeklies yesterday, they're looking for the quick pop. When they're playing SPY same day expiration, they're not trying to nail out a bottom. They're making a play on the pension fund buying coming in before the bell. Like that's what we've been seeing. Right? That's been the aggressive flow out there, whatever. And there's not even a lot of that going on. Yeah, see, exactly, Tim. All decent size and Win, okay, and that's a starting point. Like, there's no doubt about it. Like, Win should be on all our watch watch list right now. You know, especially that this thing's been hit hard recently. All right, but if they really want it, they're going to continue to come in, and it's not just going to be Wynn, it's going to be several names. Several names. Yeah, and we'll see more and more of it, you know, unless guys, you know, this is just turns into something where, you know, they don't have the confidence of it, and, you know, turns into a rally. Like, I remember which phase was it? I think it was back here. I'll show you where. Hold on one second. It was that January panic attack. Okay, here. All right. So let me tell you, give you an example. Okay, how it turned out. Okay. And we could be in a similar situation here. Here was the January panic attack. This was the melt up, okay, in 2017, the end of 2017 into 18. Everybody just bum rushed into stocks thinking there'll never be a down day, right? Then this happened. This low here, okay, there was flow, there was bullish activity, but it wasn't the type of activity I'm telling you guys I want to see. It wasn't that bottoming activity. That spec, ride the momentum, okay? And you can see the market, decent move, right? A decent move here. But ultimately, this is where all the short, right there. That's where the missiles, as we like to call them, showed up. You know, so they weren't here, they were here. So usually when these markets bottom and are ready to put a nice, healthy, lengthy rally together, usually you see the big boys show up and put some money to work, and, you know, show us confidence. They haven't done that yet. All right. So anybody have any questions on, especially those of you who are members, as far as like playbook of what I'm talking about here, right? So we don't miss it. And if you're a member, I'm talking about it, screaming about it, so you're not going to miss it anyway, unless you not paying attention at all. All right. But as soon as a couple of those signs we were looking at on the Sunday webinar, as soon as they start lighting up, that's a good time to start putting money to work with some time. And that's another important thing. You know, when we start to get those intermediate term sentiments lighting up, you know, you have to anticipate that you're going to be early. You can't buy something, you're down the next day, and you're cursing yourself out and stopping yourself out and all that jazz. You know, you got to take a nice methodical approach, understand you're going to be early, you know what I mean, and look to take advantage of weakness. It's almost like you're using the lows as your floor, you know, as your floor. So you're looking to play all that in a sense. Like that's where the quality entry will come from. Yeah, I always, even on private Twitter, when I'm excited about an order or I'm excited about any action, I'm always letting you guys know, even on private Twitter. Yeah, and you know, that's another name, okay? That's another name, without a doubt, that court action, okay? But again, you know, if in this environment, okay, you can make the decision to buy it right here, okay, or wait and let them do what I explained to you with the win, right? Because the thing is if this market with a VIX, where are we, 35? Okay, you got to understand that no matter what, even if the market's going to push higher, with a VIX over 35, there's going to be huge up moves, down moves, sideways moves, crooked moves. You understand? It's not, very rarely is it going to be a smooth ride to the upside. So what you want to allow happen is you want to allow, you know, names to base, names to maybe pull back and see if they're committed to those names. One order can mean anything. You want to see them committed. The best action is when they keep coming and they keep coming and the stock is not doing anything, but they keep buying and they keep buying. Okay, I'm not talking about trades, right? I'm not talking about trades. I'm talking about, you know, the SEs of the world. I'm talking about that out of corrections, right? PAGs, where they're early and they just keep buying and buying and buying. And then eventually these things, when the market finds its footing, then these things go. Because you got to understand, when you're in a market like this, I don't care what stock. Right now we have like Zoom and names like that going higher. When you get some real selling, like when the hedge funds start dumping, okay, everything goes south. Everything. Even the stuff that shouldn't go down, the strong stuff that should be going up, they have to sell because of margin calls. So the market takes down everything. Everything becomes correlated to the market. So you gotta, that's what you gotta understand, that if you're making a play on a name, you're making a play on the overall market when you get into these corrective phases. More than not. But yeah, Match.com is one of those names, without a doubt. They sold puts, caught a really good looking sweep, nice pull. So just like the win, should be on your watch list at the least. All right. So you guys basically have an idea of what we're talking about here as far as patience. And, as far as being active, okay, intraday, most of you guys know what to look for, right? I mean, off flow. Like, I know a lot of you who trade intraday are trading off other signals, technicals, and stuff like that. Okay, but the best type of momentum that's going to get generated off sweeper activity on an intraday basis is when those bands of buying come in. Okay, when you see one Tesla call sweeper, one Bank of America put sweeper, Wells Fargo put sweeper, SPY put sweeper, Facebook call block, when you see that mess, there's no momentum that's going to be generated off that activity. So again, that's like, all right, there was a Facebook sweep. I'm going to try to day trade it, but there's put sweepers all around it and the market's selling. What do you think the odds are? What's going to happen to Facebook? No matter what order it caught, right? It's going to go south with the rest of everything. So the best type of activity in this type of climate is where you see those bands of call sweeper activity, or if you're shorting, put sweeper activity, right? One-sided action. When you see them come in, and you want to get in the middle of that and ride the momentum. Okay, there's been more of that on the put side than the call side for obvious reasons, but if you just play the long side like I do, that's okay because it keeps you disciplined, right? If that type of activity is not coming in, you're not forcing a day trade against the current. That's basically what it comes down to. If you're long only and you're looking to get long and there's put sweeper activity all over the yard, you think it's prudent to get long in the middle of that for a day trade? The likelihood is you're going to get stopped out because all the momentum is in the other direction. So that's the logic behind it. That's the logic behind it. All right, so that's day trading. But as far as playing tactically, and again, that's just playing light, like a couple of you guys were talking about this today, right? I mean, this is one to watch tomorrow morning. Caterpillar caught some late day action, cheap stuff, March sweeper activity. They may be playing for an infrastructure thingamajigga. Why the hell is anybody sweeping Caterpillar in this mess? And it's spec action. It's not somebody making a bet on Caterpillar. Maybe, John. But so, that's the stuff you want to be paying attention to. They came in late. I think they bought two lines. The one line was the March, what was it? I don't even have it on here. What was that Caterpillar line? Anybody remember? Wasn't too far out of the money. They were definitely March. But keep an eye on the action tomorrow, or even 133. Thank you, Tree. So they were the 133 calls. All right, so out of the money, right? Spec action. Where's the stock? 124. So 133 is actually where it was a couple days ago. You know, yeah, the 130s caught volume. There were a couple March lines. All right, so this is one I think we keep on our screen off the open tomorrow, regardless of what the market looks like. And if we see them, ideally we see them come in again off the open tomorrow, and you know we have ourselves a day trade. You know, we have ourselves a day trade. You know, so they could be playing for something like that. We'll keep an eye on it, and maybe it could create some momentum. All right, anybody else eyeing anything? Nick, what have you been eyeing? I know you and Lotto have been playing the gold miners, which actually have been killer. You eyeing anything new, Nick? All these names, puff, puff, pass, catching a little more action. Just the gold miners in general have been pretty solid. Solid comeback here. You made money, you got out today. I saw that, right? Oh, you need new stuff. All right. Well, that's good anyhow, because you came off a big rally yesterday, and maybe you get a little pull and you can find something new. Yeah, Apple. See, here's the thing that worries me too about even the market that we were talking about. Oh, I know MW, you like the gold too. What worries me a little bit about the bottom, right? Trying to nail out a bottom. Hedge funds didn't puke up a lot of these names, and for me to see a panic like this, not getting hedge funds to puke up their long exposure, and we just go to new highs and the market's all fine and dandy again. Is it possible? Of course. But probable? It's not probable, you know? So what I'm getting at, for those of you who have no idea what I'm talking about, hedge fund exposure, hedge funds are all basically in a lot of the same names, okay? For good reason. You can't even blame them. Microsoft, you know, they beat quarter after quarter after quarter. Apple, Amazon's, you know, all the names, software names, all the names that if you bought dips, you made a ton of money over the years, okay? They usually, okay, even these names, their long exposure into pullbacks, okay? In other words, they get concerned about a pullback and they sell off a lot of these names, and then what happens? Then the market rallies, and we talk about it all the time, right? They have to chase, right? We talk about it all the time. Out of everything into the lows, and then they got to chase everything into the rally. They didn't get out. You know, now it was only a week that they had to get out, but they didn't get out of their long exposure. So I don't know. What do you guys think? Do you think it's possible put it this way, this market can't have a strong rally without these momos chasing, right? A lot of that move, that last rally we had, was all that non-believer money coming in late chasing, no? That was the whole second half of the move. So they haven't got out. They're not out of their, like I said, it looks like, not in a big way, but it looks like they actually added a bit to their long exposure, net from where we are. All right, but you know, you could see it happen quick. Market doesn't necessarily have to fall apart, but the likelihood is you might see these names apart a little bit. Yeah, listen, you know, these names have been remarkable. There hasn't really been, you know, even a couple of pullbacks we've had in the past, this Microsoft hardly gets dented at all, right? There any pullback in this thing. And they have an opportunity now, close to an opportunity to hit these things if they want to. No, no, no. I'm not getting bearish, Mike. I'm just talking about the crowded names, the crowded names that all these hedge funds own. That's what concerns me a little bit about where we are in the market as a whole. Here's the chart. Let me show you guys quick, just in case you didn't see it. I'll check and see if there's an update tonight too. Hold on. I gotta go to Wall Street. Jesus. Hold on. Let's see. Hedge funds. Oh man, where is it? Maybe Twitter's useless. Oh, here it is. Okay. Here it is. So you see like these pullbacks, and you see how they just get out thinking the big one's coming, Armageddon. I mean, look where they took this. They end up net short. That's what they do. And then what happens? The market starts to rally, and then what do they got to do? They got to chase in, and that's where you get these big moves. So here, you can see they added, guys. They added. I hate to tell you. Yeah, that's what I'm worried about, Mike. That's what I'm worried about. Again, when I say worried, Mike, I'm worried about trying to put on long exposure with time for that reason. You know what I mean? Where there might be a decent bounce. You can make some money if you stay tactical, right? But you don't want to get caught with a basket of longs with time if that rally fails and the real selling shows up. And I agree with you. That's definitely a realistic scenario, because if you think about it, that'll be pretty much where you get a better idea of how this virus, right? How long things get locked up for. So you get that relief rally, and then things don't improve, it can get a little crazy. We'll see what happens, though. We'll see what happens. I'm still hoping for what I said at the start, that this thing sloshes around down here. You got a lot. Think of this, guys. Where'd VIX close today? Where'd the VIX close? 35-ish? You got, VIX just over 30 in general. 36, wow. So you can realistically, gigantic range here. Gigantic. So you could have something like this. Looks like it's breaking out, right? You get longs hop in,